news flash which is just coming in because NBC has called the key state of Georgia. It is in favor of Donald Trump. So we keep getting updates, and of course we'll keep updating you as well on what the projected winner is looking like. For now in Georgia, it's 51% for Trump and 48% for Kamala Harris. The swing states, North Carolina and Georgia, both of them, that's what CNN projections suggest, that he's projected to win both these states, which will be very, very important to track as well. And, markets have been reacting to that, at least our own markets. We did see the Asian markets being higher, barring Hang Seng, of course. But for now, the Nifty is up around 150 points. Mid-caps are doing really well, 680 points higher there. Bank Nifty is higher, though it is underperforming the benchmarks. But still, there's nothing to complain about. And that's exactly what the markets are tracking as well today, Reema.
Indeed, it is a U.S. election night. It's, everything is happening over here. The world is watching with bated breath on whether the country will elect its first ever female president, Kamala Harris. So right now, her road to reach 270 appears to be a little bit more tougher. Donald Trump is clearly, leading right now. The numbers will come up for you on your screen. But what does this mean for financial markets? Manpreet Gill, Chief Investment Officer of Europe, Middle East and Africa at Standard Chartered Wealth Management, is with us on the show. Thank you very much, Manpreet, for joining in. Increasingly, it's looking like it's going to be Trump making his way to 270. He's already at 246. Now, the question is, for the last few days, the way the markets were positioned across fixed income, across equities, markets were primed in a way for Trump 2.0. If it plays out as per what the expectation is that Trump will be the next president, what happens from here on? And how much of it is already in the price, according to you?
Hi, good morning. No, I think you're right. I mean, if we do end up indeed with the Trump scenario, I'd say, look, going into this the outcome was at least partly priced. I think today, as we're seeing, obviously, election results come in, we're seeing more of a reaction as price, the higher probability is increasingly priced in. I think the key is really that in the short term, if we look just at the weeks and days ahead, there may be room still in some sort of select areas of Trump trades. For example, we've seen the dollar already react quite a bit, but we might see a little bit more upside, particularly in bond yields, equity market sectors such as aerospace, defense, energy, and small caps. So there may be a little bit of room there. I think very quickly, though, we'll end up moving to the longer-term conversations, especially once we get the Fed at the end of the week. Because at the end of the day, elections, in our view at least, can have a very short-lived impact on markets, and we'd like to see that this week. But I think we very quickly have to move to the conversation about what the implications of fiscal policy and, of course, how the Fed sort of balances against that.
That's right, because that's going to be the next big event that we'll be tracking very closely. But Manpreet, as Reema pointed out, it looks like the trend suggests that it could be Trump who could come back as the US president. And he's very emphatic about tariffs, right? Do you think that is something which could impact the global economy, especially Asian economy? There's China, there's India. How do you see that play out?
I think that is absolutely one of the key policy proposals that I think markets are going to be very, very focused on. Now, on its own, there's plenty of analyses out there that show that the imposition of tariffs do have an incremental negative impact on growth. Right? That's no surprise. I think the key is really how that balances off against what we expect to ultimately be a soft landing, continued growth in the U.S. economy. So in our view, that sets up for a world in equity markets, at least, where U.S. equities potentially could continue to outperform non-U.S. But I think in terms of emerging markets, we'll see varied responses, because clearly the tariffs, the proposals at least initially were for a disproportionate rise on Chinese imports in particular. So that's where we might see the reaction in the markets being disproportionate. But again, it's early. It's one factor that's incremental. And of course, it doesn't come as a surprise. It was always part of the policy proposal. So what will be more important is how we see emerging market policymakers react to that.
Okay, I just want to quickly talk a little bit about IT, Sonal, because IT is clearly the winner in today's trade. There are three key things to watch. One is immigration policy. Now, the last time when Trump was in power, he tightened the H-1B visa norms. Visa rejection rates went up substantially over the course of the 4 years. And therefore, you would have thought that if Trump comes to power, immigration will be a negative. But what transpired after that is that IT companies reduced their dependence on H-1B visa. They increased their local presence by hiring, by coming up with nearshore centers, centers in, in America, for instance. So they're less dependent. And therefore, now the view is that even if there are restrictive immigration policies under Trump, which we had 8 years back, it's likely to be neutral. Indian companies know how to navigate it. They're less dependent. The second is, can Trump 2.0 boost IT spends? Because if indeed he passes on the corporate tax cut from 21 to 15%, there is more money in the hands of corporates. Budgets have been tight. They've not been spending on IT. And therefore, now they will be in a better position to spend. And the third is a dollar. Now, the dollar index has already hit 105. A stronger dollar, weaker rupee, and therefore it's positive for IT margins, export-oriented, but in that IT margins also get a leg up. So that's the, the three-pronged approach to approach IT, based on this US election.
And there will be an impact because we've seen when he was there earlier, there would be so many changes to the H-1B visa norms, H-1B visa norms, and otherwise as well, right? So you used to keep talking about how there have been cost increases and other aspects as well. Manpreet, I wanted your take on the currency from here on. How does one look at the dollar index? What is the range that you're looking at? And which currency could see more pressure considering any of the trends that come out?
I think on the currency, look, in the short term, on a 1 to 3 month horizon, we always expected a stronger dollar. I think we've got that quite rapidly this morning. But for us, in the bigger picture, this has pushed us to the top of the range, which the dollar's been in the last 18 months. On the dollar index, that's about a range of about 100 to 106. So in our view, this is partly reflective of what we're seeing on tariffs, fiscal stimulus and growth. It's partly reflecting the upward pressure on bond yields. So no sort of big surprises there. I think this could very well extend when we're talking in the very short term, in the coming days and weeks. But for us, the big picture is still one of gradually falling yields as the Fed cuts rate to support growth. So we think that, of course, could potentially cause us to eventually move back to lower end of the range, perhaps not immediately. So I think that's the opportunity. I think the currencies that could be under most pressure, I think one is where the relative yield differential is sharpest, and the Japanese yen is obviously one candidate jumps to mind. The other one is, of course, emerging market currencies, because it comes back to the tariff conversation, particularly when we're looking at CNH, where bond yields, of course, are less supportive in any case. So I think that's really what we're seeing on the dollar. But I'd emphasize the election outcome, I think, is really sort of causing moves that's still within that 100 to 106 range. So for the short term, further to the upside, looking out 6 to 12 months, most probably going back towards the lower end of that range.
Going back to 104 on the dollar index, you said?
Well, dollar index 106 on the upside.
106, sorry. Okay, got that. Do you think a Trump win could push China to announce a larger than expected stimulus just to, comfort sentiment and stabilize the economy in the event of adverse tariff announcements?
Well, that's most probably one policy option on the table. I mean, policymakers are already discussing stimulus measures. We've seen many come through, and a U.S. sort of higher U.S. tariff would have an impact on growth, and it's likely we'd see Chinese policy react to that. But I think what will be interesting to see is how Chinese policymakers choose to react, and again, whether Trump chooses to prioritize tariffs first or prioritizes domestic policy agenda, because in isolation, obviously, higher tariffs on Chinese imports would result in slow growth. The Chinese policy stimulus would have to counterbalance. But I think there are many, many steps between now and that sort of outcome. And I think what will be key here is, like I said, in an event of a Trump scenario, where along the priority order that sits, and whether, how Chinese policymakers choose to deal with any such scenario, whether they choose to deal with it preemptively. I think I'll be watching that sequence of events first before jumping, to that end conclusion.
So Manpreet, there are a lot of moving parts and this situation will evolve. But right now, what will emerging fund managers do? They had tactically increased their allocation to China over the last 1 month or so. Will they now prefer a country like India where the response or the impact could be a little more neutral? What do you think? You can't, typically fund managers do tend to take decisions ahead of the announcement also.
They do. And I think what's important here, of course, is also not to overemphasize the impact of the US election alone, because you're right. I think our view always has been what we're seeing in China is, of course, a strong momentum rally as a result of stimulus measures. But in order for that to become more sustained outperformance, the size of the fiscal response is really the most important thing. Indian equities, in contrast, we might have seen that sort of that's pullback. But you can see it's a market where growth visibility is a little bit more clear cut. So yes, at the moment, longer term, we definitely favor a reversion to Indian equities. Chinese equities to us are more a very interesting, but a short-term call nevertheless, without that policy support. I think tariff policy will be one factor. But domestic growth, I think, will really be the long-term factor that drives this. And that's where, for the time being, at least, our overweight remains unchanged on Indian equities.
Okay, all right. Manpreet, thank you so much for joining in today with your take on what would the US election outcome look like and what the most importantly impact be on global markets as well. It was a pleasure speaking with you. Thank you so much for joining in. Okay, all right. So the trends keep coming in, and of course, we'll keep apprising you of what's happening. For now, of course, we got to know recently that the swing state of Georgia that has been called in favor of Donald Trump. And, we've spoken about what the impact could be on emerging markets, on Indian IT as well, as Reema just pointed out. And we are also